Hey guys, it is Julie here with JT Wealth. In today's video, we are going to discuss the highly anticipated upcoming SPAC merger between ChargePoint and Switchback Energy. So let's get into it. All right, guys, welcome back. Thank you so much for being here. Like I said, today we are talking about the reverse merger that is soon to occur between the EV charging company ChargePoint and SPAC company Switchback Energy, who trades under the ticker SBE. So in today's video, we're going to look at a couple recent pieces of positive news for the company, as well as some outlooks for what could happen to the SBE stock after the merger is completed. Now, you guys may know that I think it's always really important to look at both sides of things, so we have a couple differing opinions on what could happen post-merger, both the positive and one that comes with a bit more of a warning. And then we'll wrap it up with just a little bit of insight as to when this merger might actually be voted on and completed. So we have a lot to cover today, guys, but just before we jump into that, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. And if you like free stocks, make sure to check out the links in our description down below. Right now, Webull is giving away 4 free stocks for signing up and funding a new investment account. So make sure to check them out. Okay, now this is not the first time that we have discussed ChargePoint and Switchback Energy's merger here on the channel. We actually first chatted about them back on October 2nd, shortly after this merger deal was announced. And at that time, the SBE stock closed the day at about $15.39. So from that time to today, they're up about 115%. Now, founded in the year 2007, ChargePoint operates one of the oldest and largest EV charging networks. It says it has a 73% market share of North American Level 2 charging networks, which utilize 240-volt power. Its closest competitor has a mere 10% market share, and ChargePoint also operates in 16 European markets. The company estimates that its charging point shipments, excluding single-family home stations, will grow 10 times by 2026, and annual revenue will correspondingly increase to over $2 billion. ChargePoint and Switchback say that the combined company will have an implied enterprise value of about $2.4 billion. Of course, the EV market is booming this year, and with the growth of EVs will come the need for charging stations, and ChargePoint is already a big leader in this niche. Switchback says that charging infrastructure investment in the US and Europe is projected to be about $60 billion 10 years from now and will triple in the decade after that. And that investment in EV infrastructure is getting support from all around, as a major automotive trade association on Tuesday urged US policymakers to back sweeping support for electric vehicles, including new incentives for research and development and consumer purchases. President-elect Joe Biden has made boosting electric vehicles a top priority and pledged to build 550,000 new EV charging stations, so a pretty great opportunity for ChargePoint there. He also supports new tax credits for consumer purchases and retrofitting factories for EV production. Now, the Alliance for Automotive Innovation called in a report released Tuesday for a series of steps to boost the EV market and to revamp regulatory oversight of self-driving cars. John Bozzella, the group's chief executive, in an interview argued that the future of the industry is at stake and it depends heavily on electric and self-driving vehicles. The technologies will redefine motor vehicle transportations for decades. The Alliance noted the auto industry is spending $250 billion by 2023 on EVs. Bozzella said additional incentives are needed to boost EVs' current 2% US market share. It called for revising building codes to make EV charging easier and boosting government EV fleet purchases. Another recent positive catalyst for ChargePoint is their recent announcement with Lion Electric, who posted about their reseller agreement with ChargePoint, which under the agreement, Lion will offer ChargePoint's full line of commercial chargers and cloud services, further expanding Lion Energy's offering of charging hardware and software solutions. So obviously a lot of exciting things for the EV industry as a whole, and especially for ChargePoint. And people are really excited about this merger, as we've seen it reflect in the stock price. So on that note, let's take a look at what some experts believe the future potential for this stock could be, and whether it's going to rise further or come crashing down. Starting off with this article from Mark Hake, who says that this could be your last chance to get Switchback Energy before it pops, and that the stock is likely to move a good deal higher by the closing of the merger. Now, one of the main reasons is that ChargePoint is forecast to grow significantly. The most important point to focus on about ChargePoint is that its growth will reflect the growth in EVs. So he works out the 2026 revenue to about $894 million in today's dollars. Therefore, the enterprise value to sales ratio is just 3.69 times. This is the result of dividing 3.3 billion enterprise value by 894 million in sales. That is not a very high ratio in today's market, where it's not uncommon for stocks to have EV to sales ratios that are in the high 20s to low 30s. However, calculating the adjusted enterprise value to EBITDA ratio results in a ratio of about 21 times, and that is about a fair value for a high growth stock. So he believes that ChargePoint could rise another 50 to 60% and still not be overvalued. So with a midpoint upside of about 55%, the ChargePoint stock could be worth nearly $47 in his opinion. He also comments on how there are no current analyst ratings on the SBE/ChargePoint stock, which is common for a SPAC before its merger. And he says that this is a good thing. It means that once the merger closes, there will likely be a flurry of reports on ChargePoint once it lists on the New York Stock Exchange after taking over the SBE symbol. In other words, this could be a major catalyst for the stock to reach its inherent value, which he believes is that 55% higher than today. So a pretty optimistic outlook from Mark there. Next, we're going to take a look at an article from Dana Blankenhorn, who is a little bit more cautious on this. Now, the problem that she sees is that most of ChargePoint's stations are direct conversions of AC power. A level 1 outlet will just top your tank overnight, and even a level 2 outlet, the most common type, takes all night to fully charge. So the big future is in level 3, which takes DC power and can charge a vehicle in half an hour. Now, ChargePoint has a plug design called DC Fast, but Tesla has its own design, and most electrics are Tesla. You can adapt a Tesla plug to DC Fast, but if given a choice, most Tesla owners will choose Tesla stations. There are already thousands of such stations at hotels, Tesla dealers, and along major highways. So the big money for ChargePoint in the near term is in fleet charging. As the UPS, Amazon, and the US Post Office go electric, there'll be big contracts there, and ChargePoint's scale will matter. It's just that these contracts have yet to be let, and the company will just be selling hardware and not electricity. In other words, it's building gas stations, not selling gas. She does expect a speculative pop post-merger. But the pop could be short-lived, as a single tweet can crash a stock in this sector. She says that Tesla is the Apple of the electric vehicle market, and its infrastructure is the iCloud. You can think of SBE stocks as the Android of electric vehicle infrastructure, but the Android market in electric vehicles has yet to take off. Once speculators realize this, they will sell, leading to a rational valuation for ChargePoint investors. So certainly a bit more caution there. But the most cautious outlook comes from Thomas Neal, who said that after a nearly fourfold increase, the EV play SBE stock may not continue to climb even ahead of its ChargePoint merger. Thomas says with its acquisition target projected to grow 60% a year until 2027 and a strong business model, it seems like a no-brainer to buy this stock. However, with its rapid rise since election days, these factors may already be priced into shares, and additional near-term gains may not be in the cards. He says that while the long-term case for ChargePoint remains strong, the near-term shares are not as good as an opportunity. The problem with Switchback stock today isn't its soon-to-be underlying business. What do you get when you couple strong demand with a solid business model? All the ingredients to make this stock a potential long-term winner. The problem is that shares have moved up too far and too fast. With much of its prospects already priced in, there isn't much value in buying now. Sure, some can make the case that this stock will take off post-merger, just like Lordstown did after its SPAC deal. However, investing trends that worked in 2020 may not work again in 2021. So what's the call with this SBE stock? Don't chase it ahead of the ChargePoint deal close. Instead, take your time. If EV stocks sell off in the coming months, this strong opportunity may fall back to more of a reasonable entry point. So still some long-term optimism there for ChargePoint, as I think we all agree it is a really great business and will be in high demand in the coming years. However, as we have seen a lot of excitement and hype surrounding these EV companies and their SPAC merger dates, It's not a shock to hear that he thinks it might be a little overvalued at this time. Now, speaking about their SPAC merger, it was at first said to be closing by the end of this year, and the date was rumored to be December 15th. But it looks like we might be waiting a little bit longer for this to happen. Now, it's hard to find an actual confirmed date for their special meeting to vote on this, but we do have this most recent SEC filing from December 4th. The problem is that where we're supposed to have their meeting date, we have a lot of blank spaces. However, it is noted that this updated version from December 4th now says 2021 as the year instead of 2020. So this has people believing we now might be looking to January 15th for the vote on this merger to be completed. Obviously, we'll keep a close eye on this and be waiting to hear directly from Switchback Energy and ChargePoint as to when this meeting is going to take place and when we'll finally see the SBE stock convert over to ChargePoint. So there we have a few updates for ChargePoint and SBE, as well as some varying opinions on their stock right now. Personally, I am invested in SBE and have been for a couple months now, and I really like the company long term. I think the big word of advice or caution here is if you don't already have a position in SBE, just make sure that you understand your plan with this investment, whether you're looking to hold short or long term, and what an entry price that you're actually comfortable with is. Now, you guys know I always love hearing from you, so please be sure to leave your thoughts on this company in the comments down below. Is it one that you're invested in? Are you looking short term or long term? And do you think it'll run up higher before the merger? As a reminder, these videos are never a suggestion to buy or sell any specific stock, and any trade should always be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.